Hello, good morning, everyone. So welcome to our daily briefing. So let us start our briefing by recap on previous important economic data. Okay, so the first one is UK GDP 3-month average July. So the previous is 4.8%, forecast is 3.8%, but the actual is 3.6%, slightly lower than the forecast. So this is not really good for the GDP. So the next one is Germany inflation rate final August. So the previous is 3.8%, the forecast is 3.9%, and the actual is same as the forecast, 3.9%. So this really, how to say, doesn't affect much to the euro dollar. And then we go to the next one, US PPI August. Okay, so the previous is 7.8%, forecast is 8.2%, and the actual is 8.3%, slightly higher than the forecast. So this is a good news for the US dollar. So we take a look on the market graph here. We can see that the US dollar index, it went up last Friday because of the PPI economic data and also the US bond yields increasing. Okay, so the next one, so we go back to our PowerPoint here. So the next one is Canada employment change August. Previous is 94,000 and the forecast is 100,000, but the actual is just 90.2,000, which is lower than the previous and forecast. So this is not really good for the Canadian dollar. And then we go to the next one is Canada employment rate August. So the previous is 7.5%, the forecast is 7.3%, and the actual is just 7.1%. This is really good for the Canadian dollar. But then we go back to our market graph here, as we can see that there is rise on the USD CAD at last Friday night because of what? This is the rise here is not really affected by the important economic data, but it's more likely affected by the US dollar index here. Okay, so we go back to our PowerPoint here, and then we go to the next session of our daily briefing. For today is for last Friday market volatility recap for gold. We can see the gold prices, it declined 170 pips at last Friday. Okay, so let us read the factor here, what happened on the gold market last night. Okay, so spot gold closed at its lowest level, 1787.58 dollar per ounce in the past 3 weeks. It fell by about 2.2% last week, the first weekly decline in 5 weeks. So data released last Friday showed that the US final demand PPI rose 0.7% from the previous month, a year-on-year increase of 8.3%. So the largest increase on record. Okay, and also the rising US bond yields reduced the attractiveness of gold. So this is the reason that's why the gold market is declined for around 170 pips on last Friday. Okay, so we go to the next one is WTI crude oil. The market, the price of WTI crude oil is rise 210 pips at last Friday night. Okay, so what happened on the crude oil? So let's read the factor here. Oil prices have risen for the third consecutive week. US crude oil recorded the longest consecutive rise since July. So it rose by 2.3% on last Friday. So after Hurricane Ida about 2 weeks ago, offshore oil production of more than 1 million barrels per day has not recovered yet. At the same time, the Louisiana refinery is resuming operations, thereby increasing demand for crude oil. So, okay, so we take what is the conclusion of this WTI crude oil? So the production, the supply is stuck. And second, the demand for crude oil is increasing. So that's why we will look for further upside for the WTI crude oil for this week. Okay, so we go to the next part of our daily briefing today. So for today, we don't have any important economic data we have to focus on today. So we just skip it and then we go to the market update straight. So for the market update today is gold. The resistance level of today is 1797. The support level of today is 1781. My personal opinion is bearish. Okay, so why bearish? So let's read the factors here. According to the latest results of the Kitco News Gold Survey, as the sentiment of Wall Street analysts has clearly turned neutral and retail investor interest is sluggish. gold prices are not expected to rise anytime soon. So at present, gold seems to be stuck in the trading range of $1760 to $1840. So there is not much news in the coming week that may change this situation. If the price of gold cannot close above 1800 this week, downside risk will gradually increase. So focus on important data such as CPI, retail sales, initial jobless claim, and consumer confidence in the United States in this way. Okay, so we go to the next part to our weekly important CFD share. Okay, go next part to weekly important CFD share. So the weekly important CFD shares here is just only Oracle. There's no any other company releasing their quarter earning report. Okay, so just Oracle. I found an article of the Oracle for the earning report and also for the company. I wish you guys you can read it and then you can share the information to all your clients so they could have they will start trading on Oracle company here. So, but this overall is actually quite a good news for Oracle. And then we go to the technical analysis to the market graph for Oracle here. This is the resistance level of 90.60. Okay, so this is our target, and this technical analysis provided by the other chart is still looking for the upside direction. So, and their target is 90.60, the price of the share price here. So that's all for our briefing today. Then I wish you have a good day and see you again. Bye bye.